what I've learned is that most of the price action between the halvings is sort of completely irrelevant because every halving, without fail, as that scarcity ratchets up and the amount of daily supply gets cut in half approximately every 4 years, although it's happening faster than that, the price 5 or 10x is like every single time.
You said the froth is leaving the market, but some tech stocks could go down another 20 or 30%. Does that not concern you at all that Bitcoin, if you were to kind of put your trader hat on, that Bitcoin could tumble another 20 or 30% too?
For sure, it could tumble another 20, 30, 40%. But remember, historically, all technological innovations that get adopted by society grow all the way through high interest rate, low interest rate. There's sort of like a truth about the world and reality, right? And then there's macro conditions. Like the thing that's happening to Facebook and Netflix right now is that their markets are completely saturated. Bitcoin's not like that, right? Bitcoin has a $750 billion market cap in a total addressable market of maybe 200 or 300 trillion.
This episode features Mike Alfred. Mike is a Bitcoiner and early stage investor, and we talk about the most important issues in the market right now. First thing we discuss is Mike's call with Bitcoin billionaire Michael Saylor last week. I get the inside scoop on what they talked about. I want you guys to hear that. We also discuss Bitcoin trading like a tech stock recently, Elon Musk taking over Twitter. We look at Bitcoin mining stocks as one of the most interesting investment opportunities out there, and Mike made me even more bullish on Bitcoin and talks about why you probably aren't as bullish as you should be. If you guys enjoy this episode, be sure that you subscribe for more of these. This is WAGMI, the best place to hear from sharp Bitcoin, crypto, and NFT investors. Let's dive in. You've stayed busy even after you got home. I saw last week you said you spoke to 8 billionaires, and I think some people think you were exaggerating with that, but you showed the receipts. You were on a call with Michael Saylor last week talking Bitcoin. What went down on that call? Are you allowed to share any of that?
So it's funny, like I think we've talked about this, right? I never really used Twitter up until I left NYDIG last June, and so I had like maybe 4 or 5 thousand followers. I really didn't use it actively. I didn't know how to use it. I saw guys like you and Pomp who are experts, and I always admired that, but I always thought that was like fluff. Like you didn't really need to use it. So then my following started to grow last year, and I realized, wait a second, Pomp is just using this as a platform to see more deals, right? Get to know more people, have more leverage in the market. And I started to experience that myself recently because I think Michael Saylor followed me last fall. That's a big day if you're a Bitcoin person, right? To have Michael Saylor or Jack Dorsey or
Right.
somebody like that follow you. And so I never reached out to him. I never DM'd him. I just left it alone for 6 months. But then Miami was coming up, right, a couple weeks ago. And I was like, so I finally sent him a DM. I'm like, hey, Saylor, like, I'm going to be in town. Would love to stop by and connect or whatever. No response, right, for like a week or two. Then, like a few days before I'm leaving for Miami, boom, in my inbox, an invitation to go to his backyard barbecue at his house
What?
in Miami and hang out and eat Wagyu burgers and talk to other folks from the space. And so I talked to him a couple times at his house that Saturday barbecue. One of the only things he told me when we talked is like, listen, I know you're on the board of Iris Energy, and I'd really like you guys to stop selling your Bitcoin. I was like, well, we liquidate the Bitcoin every day because if we didn't liquidate the Bitcoin every day, then we'd have to raise more equity and debt capital because we're a real assets platform. We develop all of our mining farms from scratch, right? Ground up, kind of greenfield development. And so that's not cheap, but it gives us full control of the stack. And so that conversation led to a couple DMs after that, me thanking him. I brought him a bottle of Angel's Envy, by the way, the double rye.
Nice.
It's one of my favorite. It's a toasted rye. I can't remember the exact terminology, but the Angel's Envy rye that's pretty popular. I brought him that, and I gave it to him there at the party, and he immediately handed it to one of his guys to put it behind the bar. He's like, "This should be opened." And so they opened it immediately, and anybody who wanted it could order it at the pool bar at his house. But anyway, it was the conversation when I finally got Dan, the CEO of Iris, in front of Michael Saylor was just more strategy around where we see the mining business going over time, what the Bitcoin Mining Council's actually set up to do, the fact that it's not a political organization, right? They aggregate anonymized data to help broadcast that data in the market so people can understand what's actually going on in the mining space. And so we actually decided to join after that meeting. So clearly Saylor was pretty persuasive because we were not members before that.
Yep. Does talking with him, does he just make you more bullish? Does he have like that infectious bullish uh, kind of intuition about him? Like I feel like every time when I see Saylor tweet something or give us like a mundane answer, a question on CNBC that could be so normal, right? Any other person responds, you're like, oh, I've heard that before. But the way that he's able to tie some of these concepts together and explain how big this could be, it's something that me and you have talked about as well. It's like, what if we're right? And I think a lot of people underestimate that outcome. Does talking with him kind of like do that every time?
Yeah, it's interesting because most of the conversations with billionaires that I've had are, a little bit different in tone and tenor, right? A lot of the smartest people, a lot of the wealthiest people in the world generally are not willing to go on the record and make a really strong call
Right.
on something, right? I mean, I think that's part of why they're so successful, right? They're able to carefully consider all of the potential outcomes and sort of probabilistically weight them over time. And so they're always saying it depends, right? They're always saying if this, then that, right? And adding some qualifiers and some mitigants to any statement. But Saylor doesn't do that, right? At least as it relates to Bitcoin, he is an unabashed, convicted bull, right? Doesn't waver, doesn't waffle, doesn't hedge, knows it's going to a million, 2 million, $3 million a coin, and doesn't mince words about that at all, which I like, right?
Yep.
I think that's kind of unique and refreshing in a world where everybody is hedging. So yeah, look, I'm as you know, a long term, a sort of a 20-year bull on Bitcoin. My thesis around Bitcoin runs 20, 30 years. And so talking to him does get me more excited, but it doesn't really change my thesis. It's nice to know he's there,
Right.
right? We need more people like Saylor over the long run. But if you really understand Bitcoin and you believe in it, then you realize that that's sort of inevitable. That like if it wasn't Saylor, it'd be somebody else, right?
Yep.
If it wasn't Alan Howard, it'd be somebody else, right? Um, Bitcoin just does that to people. That he's sort of a vessel for the spreading of Bitcoin, but if he wasn't there, somebody else would have to do it.
Yep.
So yeah, I'm bullish. Always willing to talk to him about anything related to Bitcoin. But again, I'm because I have such a long term thesis on it. It doesn't really change my belief system that much. Talking to anyone about it.
I want to get into that belief system then and the inevitability of a bullish Bitcoin scenario because right now it feels like conviction. If you were to take a poll of all the holders out there on Twitter, just across the world of people that buy Bitcoin, trade Bitcoin, own Bitcoin, conviction is pretty close to a low. I would say this is the worst start we've had to the year since 2018 for Bitcoin. It's now been 4 months. We're below the yearly open where we started the year. This isn't normal. Like if you look back and at the previous 5 years, we rarely spend more than 30 days below where we started the year. It's almost always just green. Like it makes holding Bitcoin easy. And lately, at least for traders and people that don't have the conviction and the vision that you guys do, it's been a little tougher. They're getting concerned. And I think one of those concerns is that Bitcoin lately has been trading like a tech stock. Like it's been almost moving in step with a lot of the NASDAQ stocks. And before we talk about that correlation trade, I want to ask you, because you have a lot of experience in traditional markets, what the hell is going on with tech stocks? You have things like Netflix, they're trading like shit coins. They're down like 50, 80%. What is going on here, Mike? Make sense of this for me.
Oh man, well I actually called this pretty spot on back in the kind of summer and fall of 2020 when these tech stocks were running up, going nuts. The Zooms and the Teladocs and even things like Peloton that are considered to be like tech enabled, right? They just ran too far too fast, right? This COVID trade, the stimulus, right? The low interest rates, the bond buying programs buying 125 billion, dollars in mortgage and right traditional bonds every single month. Like that was just inflating all these long duration trades. So anything that didn't have any profits in the short run, that was really a long duration bet on the future of the world, was trading at an astronomical valuation. I tweeted incessantly about that, but calling out Peloton, Shopify, Netflix, et cetera. I even said once, buying Zoom at $500 is like really expensive, and buying Bitcoin at 30,000 is really cheap. Most novice investors look at a $30,000 price and they say that sounds like a lot, and they look at a $500 price and they say that looks cheaper. little bit of unit bias
Yep.
there. But look, all of the froth has come out of the market because the market's now pricing in higher rates, right? So you're seeing that rates have gone up. Mortgage rates are up 5%. They were at 3.5 just a few months ago. So that's a tremendous headwind in terms of the cost of capital, and that pervades the whole economy, right? Bond yields are going up, right? It means it's going to be harder for companies to attract capital unless they can generate profits right now,
Right.
right? Unless they can deliver value right now. And so I've been a big proponent over the last couple of years of transitioning more of a portfolio into healthcare stocks, consumer staples, low multiple, high cash flow type of businesses, because those businesses will do much better in a rising rate environment where the cost of capital goes up and business conditions just generally get tougher. So I actually think this could continue a lot longer than most people think. I think Netflix and Shopify could easily go down another 20, 30, 50%. I'm not saying they will, but if this negative sentiment period continues, then there's no reason why those valuations can't compress further. Because if a business is forecasted to grow 50% a year, and then all of a sudden it looks like it's actually going to be flat or negative, then that valuation can go from 40, 50, 60 times earnings to 10 times earnings pretty easily, particularly again when you're at this inflection point in terms of bond yields and interest rates. So I think this is all healthy behavior. In terms of the correlation with Bitcoin, I think that's a short-term problem that relates more to the types of people who are holding Bitcoin than it does to the fundamentals of Bitcoin. I actually view Bitcoin as a value investment here. I would think of it more in line with Bristol Myers Squibb and CVS than I would with Netflix or Shopify. I realize it has technology components to it, but as a fundamental investment, right? If you're going to deploy capital to it, I think a value investor framework actually makes more sense in the long run because it's not a technology company, right? It doesn't have to hire engineers. It doesn't have to dilute the stock with stock options, right? It's not competing really with a bunch of other companies in a vertical. Just a very different proposition. It has a network effect component to it, a Metcalfe's law, right? Type of exponential growth chart where if you continue to add new users to Bitcoin, the price will go up. In the short run, if you're listening to crypto Twitter and you're watching all the traders, they're going to scare the shit out of you,
Yeah.
right? Because they're all focused on price action. But let me just share one anecdote from one of those billionaire conversations I had this week. Sat down with like literally one of the most OG Bitcoin people in the space, right? And we were talking about the price action recently, and it basically he said something that I thought was really interesting. He said, "Look, like I've been in Bitcoin for 8, 9, 10 years now, and what I've learned is that most of the price action between the halvings is sort of completely irrelevant because every halving, without fail, as that scarcity ratchets up." And the amount of daily supply gets cut in half approximately every 4 years, although it's happening faster than that. The price 5 or 10x is like every single time. And so he said, if you're paying attention to the bouncing around between 39 and 69 and 45, and he said, you're just missing the whole point. He said, I'm already focused on March, April of 2024 because I'm very confident the price is going to be 5 times higher at that point. And I thought that was a really smart comment. But again, that requires you to zoom out and say, I don't really care about the price between now and March of 2024. Whereas, as you know, most traders are focused on this week, today, the next few
Right.
hours, right, et cetera.
I think the other thing that's tough, and I'm speaking from my own experience, but I imagine there's a huge majority of crypto investors that fall into this bucket as well. The other thing that makes this tough is a lot of us haven't been in a regime like this. Like, Bitcoin's only been around a decade.
Mhm.
Crypto and most investors have only been buying ETH and altcoins and NFTs as recent as 3 or 4 years ago, maybe 5 years ago is when most people showed up in 2017. And it's always been a period of money printing, easing, funny money. Like everything goes up, every dip gets swallowed, and we just kind of grind higher. This feels like the first time where you're in a situation where you have to, you know, maybe it's not even helpful to think about macro for a lot of people, but it's in their face every day, and they have to deal
Right.
with the idea of pundits and talking heads and CNBC and every article they read about this is over, it's doom, rates are rising, tech stocks are going to keep crashing, and Bitcoin goes with it. Does it not concern you at all? Then, as you said, the froth is kind of is leaving the market, but some tech stocks could go down another 20 or 30%. Like you said, who knows? What if this lasts a little bit longer? Does that not concern you at all that Bitcoin, if you were to kind of put your trader hat on, that Bitcoin could tumble another 20 or 30% too?
I
Um,
I for sure it could tumble another 20, 30, 40%.
Yep.
Like that's absolutely possible, right? And maybe not even that unlikely. But again, most people in this market have never lived through a full economic cycle because the Fed simply hasn't allowed one,
Yep.
right? So almost everybody in crypto that I know that's under the age of 40 has never invested their own money through a real downturn.
Yep.
But remember, historically, all technological innovations that get adopted by society grow all the way through high interest rate, low interest rate, negative bearish macro, super positive, right? End of cycle dynamics, right? There's sort of like a truth about the world and reality, right? And then there's macro conditions. And so the way I think about it is you have to deconstruct kind of the short-term negative sentiment and the macro, constraints on Bitcoin's price from the S curve of that adoption, which if it continues, it sort of doesn't matter what happens with macro conditions, right? Because if Bitcoin's adopted, then the value will go up over time. And so again, I think it's being conflated, right? I think
Yep.
people are conflating Bitcoin with NFTs and Bitcoin with Ethereum and Bitcoin with Shopify. And I think those are all fundamentally different things in a risk off macro environment. They all appear to be similar, but if you look out a few years, the true quality, right, the actual adoption, right, the actual fundamentals, right, of that network will shine through or they won't, right? And my belief is that whether it goes down 20% or 30%, it goes back to 30K or 28K or doesn't. The real value of Bitcoin in 3, 4, 5 years is 200, 300, 400,000. And so whether it goes down on the way there or not is sort of irrelevant because again, I don't trade it.
Yep. Yep. That makes sense. I mean, even thinking back to the last time we decoupled was, Corona crash, March 2020, when Bitcoin traded like
Mhm.
a tech stock. That was the only other time that it's been this long where it just tracks stocks. And then eventually we decoupled. It was like 6K to 8K to 10K. And then we ran for almost 10X. Nothing really happened that changed it. I just remember going from one day tuning into CNBC and everyone's tracking the dollar index and what that means for Bitcoin. Then we're tracking stocks and what that means for Bitcoin. And then after a while, Bitcoin just started going up. And like people stopped talking about it moving with stocks. People stopped talking about it moving with gold. It just ended.
And that happened in a micro way when Facebook reported their last earnings and the price fell 20 something percent in a day, right? So Netflix fell 36% this last week. A few months ago, Facebook fell 20 something percent. Bitcoin actually went up the next day, right, during that time. So it had some micro periods of decoupling that kind of prove its kind of merit in the short periods of time. But again, like because it's not a tech stock,
Yep.
right, and because it's still being adopted. I mean, it comes down to market, right, at the end of the day. Like the thing that's happening to Facebook and Netflix right now is that their markets are completely saturated, right? Like there's not an unlimited number of people willing to pay $15 a month for content that's kind of old, right? And so like that was cool and sexy 5 or 7 years ago, but Netflix is a mature business. Same thing with Facebook. If you already have billions of users, who else is left to use your platforms? Bitcoin's not like that, right? Bitcoin has a $750 billion market cap in a total addressable market of maybe 200 or 300 trillion over time, right? So I'm not saying it's going to get all that market size, but it's much more like Netflix 15 years ago, right, or Facebook 15 years ago than it is like those companies today. And so again, in the short term, nobody cares. They just sell anything that's liquid. But in the long run, you have to ask yourself, like, what kind of market are you growing into? And even though Bitcoin's not a stock, I do think it's helpful to really look at those TAMs and say, hmm, maybe I shouldn't be paying 30, 40, 50 times earnings for a company whose market is completely saturated when I can buy an asset that's maybe only 1, 2, 3% of the way there to market penetration. And so, look, I think there's a big difference between those things on multiple levels, but that's one important dimension where I think they're materially different.
What do you think gets investors and specifically institutions, sovereign wealth funds, the larger money to understand that analogy that you just laid out? That Bitcoin is a lot more like a value play here than it is a tech stock. Because it seems like last year, and really for the past 2 years, the narrative has been institutions are coming. Every corporation is going to put this on their balance sheet. Larger countries are going to adopt it. I know we have our first couple, but it seems like we kind of only got the institutions that are treating this like a correlation trade and are kind of skittish. It's like what changes, or what's kind of the catalyst that makes that larger money see the trade like you do, or see the investment opportunity like you do?
So I think it's happening under the surface already, right? Like obviously everybody was disappointed we didn't see more kind of mass mutual quality, New York Life quality investors kind of come out publicly
Yep.
and say they bought Bitcoin last fall and coming into the spring. But the reality is that those types of firms that bought it, they're only going to be adding. They're not going to be subtracting, right? And it's because they have these long duration liabilities, right? As insurance companies, you have to be able to pay off these policies in the future. And when you look at the world with a clear eyed view, there's really nothing else as an insurance company where you look at it and go, God, with current conditions, with current valuations of real estate and current valuations of bonds and inflation rates, et cetera, like how are we going to do that? And so they're increasingly just choosing because the economics make sense. They're choosing to hold Bitcoin. One of the things that happened recently with the Russia Ukraine conflict is it made it very, very clear to people that these currency reserves that these governments are holding as sort of like trade surpluses with each other can literally be seized, right? We like stole 500 billion dollars from Russia. Like basically what we're saying is if you disagree with us, we will literally seize your assets. We'll just take them from you because any currency reserves that I hold are actually somebody else's liability, whereas Bitcoin isn't. And so what I think where I think the narrative goes that helps people get there is this Bitcoin as this neutral reserve asset, because you can't hold dollars, right? If you want to make sure if you ever get in a conflict with the United States, we're just going to take those dollars from you. You can't hold rubles long term because nobody trusts Putin, right? You can't hold yuan or renminbi because you can't really trust China either. And gold is not divisible enough, right? There's not enough of it. It just doesn't work as a monetary asset for reserves at scale. I mean, we went off the gold standard in 1971 because we literally couldn't hold up our part of the bargain from the post Bretton Woods kind of monetary agreement if we stayed on a gold standard because everything was breaking because the dollarized economies around the world need more dollars in order to run to buy oil, et cetera, and we don't have enough dollars, right? So we got to make more of them. And so I think that's where Bitcoin starts to solve these like very major geopolitical problems. Like when people are thinking about what do I hold in the long run to guarantee that my reserves are never stolen from me, to guarantee that I can settle using like the most secure settlement layer with an asset that's native to that settlement layer. And I think as more people do the work, and I'm seeing more pieces on this, I'm seeing more conversations about this, you're going to end up arriving at that place intellectually anyway. And so again, I view it as inevitable. I don't even think it needs to be pushed that hard, right? You don't have to like oversell it. You're seeing asset managers like Van Eck put out great pieces on this, where it's just like, look, if you just market size Bitcoin as a neutral reserve asset, you get something like a $1 million to $4 million type of price, right? And I think that's approximately right. That's where it's headed over 10, 15, 20 years.
1 million to 5 million. I'm okay with that target. I think that's
Yeah,
a reasonable target.
especially if you own it today and you don't sell it. You don't degrade it, and you don't lose any of it to counterparties, and you don't deposit with any of these consumer lending applications that are supposedly going to pay you a yield, but then they might go out of business, right? Like, I just think more people need to think of it as this pristine collateral. One other area, Luke, that's really interesting that's evolving right now is mortgages for people that hold Bitcoin. Right, there are very few products in the market today that allow somebody to hold Bitcoin to get to qualify for a mortgage or use Bitcoin as a cross collateralized asset alongside real estate. I think that's going to be a huge, huge market over the next few years, and something I'm watching closely.
As a renter, that's just something that I haven't considered yet. I don't know when I'm gonna face that, but yeah, everyone realizing, what's wild about Bitcoin in the past year is, as you just described, is we used to have to kind of come up with hypotheticals for why Bitcoin would be valuable, right? You could say these are the
Mhm.
reasons that it beats gold. It beats gold in these categories. It's better in this situation. And now we have those situations. Like there aren't these things we have to theorize and write up and say, what if this happens? This is how central banks and governments need to react. These things have happened. And it's like, okay, here's the solution. It's already ready. And that's been a wild thing, as you said, for individuals with mortgages, but also for countries that are realizing, oh shit, I can't just store this gold or I can't store dollars. Like, what if we get a disagreement? And now that solution's here. And I think that's a huge paradigm shift that we haven't really even seen the effect of yet. But it has happened. Like it's shifted now. We're living in this new world.
And we were talking about inflation as Bitcoiners being higher than reported for a couple of years now, right? I actually right when the COVID crisis hit and we immediately had our policy response, I was tweeting about inflation. Then I got yelled down by people, as you usually do when you're right and contrarian on Twitter, right? Like it's super unpopular. Like a real unpopular tweet never gets any likes. You just get yelled at. But now it's here, right? And so we've sort of been vindicated. Like obviously, inflation was not transitory. But the implications of that go beyond, like if you're a middle class person trying to pay for gas. What about if you're a company and you have a whole bunch of cash on your balance sheet, right? What if you have European operations and you're literally having to pay to deposit your cash, as Tesla and others have experienced? So, look, we can go pitch corporations all we want, like, hey, you should put this on your balance sheet or whatever, but their CFOs and their treasurers and they're looking at the numbers right now and they're saying we need to do something, right? Because this doesn't make sense. We're holding a whole bunch of this asset that's being debased away at 8, 9, 10% or more, and we don't have a solution for that. Like the solution is not to just leave a bunch of cash earning essentially zero or paying to deposit it. So I think you're right. The use cases are sort of embedded in what Bitcoin is fundamentally, and that's why like you don't even have to cheerlead that much. I mean, tweeting about Bitcoin is fun, but at the end of the day, like Bitcoin's either going to win or it isn't. And right now, it appears that it's winning because the fundamental use cases that it enable are playing out in the real market.
Right. One of the things that I've seen people cheering on this week is the potential for a Bitcoin ETF. And you spotted something that has to do with the Grayscale Bitcoin Trust, which is one of the largest Bitcoin holders in the world, based on how that fund is structured. It's not an ETF yet. People think that it should be because the US lets you buy Bitcoin futures ETFs, but they don't let you buy Bitcoin spot ETFs, which makes absolutely zero sense. Every other country in the world's allowing it. We're holding it back. What does that mean that the discount has changed? Do you think that's actually signaling that there's a higher chance we get a Bitcoin ETF this year?
It could just be a bounce, right? Like at a 30% discount, again, from a value investors framework, you're buying a Bitcoin at a 30% discount to the value of Bitcoin. And if you understand Bitcoin, you know the value is going to go up in fiat terms as well. So it's sort of a no brainer to pick up the trust at those levels. And so it could just be a trading bounce in that premium discount kind of fulcrum there. But I actually think if it were to rally too much more, it would be a, kind of an early signal that some of the smarter, larger institutions believe that a Bitcoin ETF is likely. You know, Barry and Michael, Barry Silbert and Michael Sonnenschein at Grayscale slash DCG. I'm actually wearing my DCG shirt right now. Those guys are at least saying the right things in the market, that they have a genuine intention to push the conversion, and if they don't like what they hear from the SEC, that they will sue them. I think they're sincere in that they may not be able to force the SEC to make that change as quickly or to sort of allow that conversion to happen, but it is in the best interest of the holders. I mean, you've got like 25 or $30 billion of value sitting there, and it can't be extracted in the current form. And so you are, in a way, materially harming those investors. And you're saying it's okay for them to go out and buy, you know, another ETF that's futures based with probably at a 15 or 20% embedded fee. So I don't understand that. I mean, I get that you're more comfortable with a regulated futures exchange, but the net result to the buyer of that ETF is quite negative relative to if somebody could just have a large, perfectly transparent, you know, spot ETF. So I've been a huge proponent of it. I commented in RA Biz in an article the other day, and Grayscale's Twitter mentioned that, right? Because I said, look, the SEC's intransigence is essentially responsible for this discount.
Yep.
You know, Grayscale pulled something really magical. What, it was 2016 or 2015 that product started trading, and they found this kind of regulatory thread where they could issue these shares privately and then they could trade OTC, right? And for years it traded at a premium, and all of these guys got stuck in this premium trade when it flipped negative last spring. It's almost too perfect, right? Everybody starts to think there's free money lying on the ground, and they go to pick it up and they get washed away by a tsunami. And that's kind of the way markets work sometimes, as you know, like something that looks like it always works almost always stops working at some point, right? And that's what happened. A bunch of people got trapped in that trend. I'm sure they'd like to be let out, but I really care more about the average retail consumer who bought Grayscale Bitcoin Trust in an IRA because that was the easiest way to get exposure to Bitcoin. And now they've wildly underperformed Bitcoin over the last year or two, sort of to no fault of their own, just because of the dynamics of that premium and discount. And again, the SEC blocking the conversion, because if they would allow that conversion, automatically the price would trade up to NAV at that conversion point.
Can you explain to me why that discount is that severe? Like, I understand that there's going to be some discount because the Bitcoin or the shares that you buy, it goes in, it's locked, you can't redeem them right now. So I understand there's going to be some discount based on the fees, based on the fact that you're locked once you're in. But why is it 20%? Like, isn't that free money? What am I missing here that, if I'm willing to wait, let's say I assume there's going to be an ETF in 5 years, or even if there isn't,
Yeah.
doesn't it still seem like a good trade at 20%? Like, how can that discount persist for so long? What does that say about the market?
It's a very common problem with closed-end funds, right? Because there's no mechanism to kind of redeem the underlying collateral, essentially, right? There's no mechanism to just raid the trust and extract all the Bitcoin. Because if you could do that, you could get control of GBTC and just take the Bitcoin out, then you would remove that discount immediately because you would just have access to the underlying Bitcoin. You could sell it at market. So this happens. It's a supply demand dynamic. Remember, it traded at a premium all those years because it was one of the only ways to get access
Yeah.
to Bitcoin easily in a brokerage account or an IRA. So what happened last year? Well, all of a sudden there's Canadian ETFs. There's a lot of new alternative products. There's a lot of new exchanges. There's a lot of new ways to acquire Bitcoin. And so the novelty of being able to use this Bitcoin trust sort of wore out, right? Then as people started to look deeper at it, they're like, wow, 2% fee. There's no mechanism to force a conversion. There's no guarantee that it'll ever convert. And so like a merger arb trader, you're trying to calculate what are the odds of this happening in a certain period of time in the future. And if you knew for sure that it was going to convert to a right, if you knew for sure it was going to convert to a spot ETF, of course that discount would evaporate or mostly evaporate. But as you see with some of these publicly traded companies that have acquisition announcements and whatnot, they often trade below the amount of the actual acquisition because the market's constantly discounting whether that acquisition will ever get done. So you'll see an
Mm.
announcement, hey, XYZ company is going to get acquired for $65 a share, but it's trading at 58, and it's only 3 months from the hypothetical closing, but there's still a big group of people who either don't want to see that acquisition close, don't believe it'll close, think there'll be antitrust reasons or whatever. And so the same thing is happening here, right? There's enough doubt about when and how that trust converts. There's doubt about whether Barry and Michael are serious about it. There's doubt whether the SEC will allow it. There's doubt whether or not, right, even if they convert it, whether people will be able to extract all the value, right? There's just enough doubt that that discount goes negative, and because of supply demand, you have people that are selling sometimes because they're scared. You have people that are selling, right, because of some technical reason, right, that has nothing to do with the value. And so, look, I think it's a fine buy at 30% discount. I think as a value investor, it's a pretty easy thing to own. But I can't make any predictions on when it's going to convert. If it takes 2 years, I still think you'll get decent value owning it here, but I would prefer to see it happen, in the next year or so.
Wouldn't we all? So anyway, yeah, if it converts, it's a damn good trade. I'm kind of curious, like those spots right now are interesting. A chance to everyone wants to buy Bitcoin lower. Who knows if they get that chance or not? But I think the market is kind of maybe in the next month, maybe the next 6 months. Who knows if it takes a year for sentiment to kind of turn around? What are you seeing in Bitcoin mining stocks? That's an area that you spend a lot of time on, the Bitcoin mining space. Do those stocks now provide even more value since Bitcoin's kind of on a discount and stocks, their multiples are declining? Like, is it like a double value play with Bitcoin mining stocks, or is Bitcoin still the better pure play?
Look, I think we're nearing a generational buying opportunity in some of the top Bitcoin miners. I mean, the challenge just with these companies and with any companies is trying to identify which ones are actually still going to be around
Right.
in 5 or 10 years, because this business is only going to get harder, right? Every halving, remember, your revenue stream gets cut in half. Like it's not like over the course of a few quarters or a few years. It happens all of a sudden. And a lot of Wall Street analysts are forecasting the next halving in May. of 2024 because the last one was May of 2020. But guess what? We're running ahead. We're solving blocks faster than 10 minutes, right? And so the halving cycles may be 44, 45, 46 months, not 48 months. So that's a few months of less revenue. And so, look, there's a bunch of people that are going to pay too much for machines. They're going to take on too much leverage, and they're not going to be around. There's a bunch of people right now that have machines they can't even plug in, right? Because they don't have control of their data centers. They don't have control of their hosting environments. They don't have control of their power. So you got to be really careful, right? I'm becoming more bullish on the real asset platforms, infrastructure providers, people who can actually build out and develop. They own the land. You build your own data centers, right? You can't be disrupted as easily as somebody who basically owns a lot of machines but has nowhere to plug them in, or is getting
Mm,
kicked out by their hosting provider, or the energy prices go up and so they're no longer profitable, or they're mining in jurisdictions where there's political instability, which
yep.
is, a lot more people than you would think. If you're in China, Russia, Kazakhstan, et cetera, like it's been a little messier than people would have liked. So I think among those top tier though, like there's two or three in that group right now that are 100x type of opportunities. I think it's going to look a lot like the internet data center business. So if you look back at 2002, 2003, we're at the end of the dot-com blow up. People thought the internet was over. Turns out the internet was just getting started. Those infrastructure providers that provide the bandwidth that runs the internet, those companies, a lot of them have been 50, 100, 150x's off the bottom. Like Equinix is a good example, is trading at $3, right? In 2000, going into 2003. That's how I would compare miners at this point. It may take 10 years or 15 years to get 100 or 200x out of some of those names. But again, of the miners that survive and are still here in 10 years, my guesses are going to be tremendously more valuable. And I think now's the time to do the work, right? Like, because nobody cares about these stocks right now. They're just down in the dumps with everything else.
Yeah. Another stock that kind of fits that same mold of Bitcoin being on a discount and the stock is Coinbase. And I saw Ledger tweet out that it's only trading at like 3.7 times its earnings right now versus when it launched, it was like 20 or 30 times more expensive. And at the same time, their revenues are up and the inevitability of Bitcoin's only gotten stronger. What's your view on Coinbase if you have one? Obviously, you don't have to give financial advice or anything, but curious how you see it.
No, I've been public about it. I'm long. I think it's a pretty tremendous opportunity for an investor. It's very rare to be able to buy a growth stock that's still at the very early stages of its evolution at a value price, right? That only happens when the macro overlay environment turns, very bearish. And so it's tough, right? Because you look at Kathy Wood's portfolio, and there's a bunch of stuff in there that I still think is overvalued. But then I look at Coinbase and I go, wow, okay, that's the second or third largest position in the ARK Innovation Fund, and it's actually well priced, right? They're trading at like probably one times or a little bit over one times run rate revenue, if I remember correctly from their last quarter. I mean, they're trading at just over a $30 billion market cap. It's hard to see how that business isn't $100 or $200 billion market cap company over the next few years, if we're right about Bitcoin and Ethereum and crypto broadly, right? If that space is going to grow, and you're one of the primary branded regulated platforms in the U.S., you will have more competition. Your spreads might go down, your fees might go down, but these are huge financial services businesses at scale, right? That Coinbase is going to have trillions of dollars of AUM, and there's so many other business lines you can offer to customers when you have that type of scale. So yeah, I'm a bull with Ledger. I do think Coinbase could go lower. I think it could go to 100 or 110 or 120 if there's another kind of drawdown. I think anywhere under 200 is a fine buy if you're going to hold it for 5 years. I do think it'll be $1,000 stock in 5 years or less from now.
Interesting. I don't have any stock exposure. I should probably get some, but like I'm so young and I'm so all in crypto that my view is always like I'd almost just still rather own Bitcoin and ETH and whatever else. It just makes it easier for me. But like as you describe some of this stuff, it definitely it's making me think about it. Like if this lasts another 3 or 6 months and stocks multiples keep compressing, I think a lot of people that are all in crypto, which is a lot of all of us who do this full time, I think some people are going to start looking at this stuff.
I think it's going to be hard to beat just Bitcoin straight up or
Yeah.
ETH straight up over time. If I'm really candid, but I love building companies,
Yep.
right? I love investing in companies. I love leading a seed round and taking a board seed and helping a company grow from the very early stages to growth stage and IPO and beyond, right? I'm on the board of a publicly traded Bitcoin miner called Iris Energy. I love working with that team. So the company building process itself interests me. So I'm an equity holder in part because I think it's a great security to own when you can own the right businesses at the right price. But crypto equities are highly levered to the price of crypto. So you're not really getting any diversification benefits. So you do have to kind of ask yourself, like, can Coinbase beat Ethereum? Can Coinbase stock beat Bitcoin?
Yeah, it's
Again,
tough.
I have no idea, but my portfolio is diverse enough now that I don't really mind having multiple exposures to the same thing, right? And that way you sort of make sure that you win if you're right about your underlying thesis, right? But I have a lot of exposure via crypto equities to Bitcoin ETH, and then I have just a lot of exposure directly.
Yeah,
So I'm probably doubling, tripling down on risk. But again, because I've done a lot of the fundamental work on valuing Bitcoin, I'm pretty confident I'm not taking as much risk as a casual observer might believe.
that's fair. Mike, one of the things I had a kick of we were having beers and talking about Bitcoin and ETH was I think at the time you had just sold a little bit of your initial ETH investment, and that funded a nice little vacation going skiing. And I think I saw you tweet lately that you got rid of the rest of the ETH and are all in Bitcoin. Do you think about the growing narrative of ETH as ultrasound money? Do you view that as a challenge to Bitcoin at all? Like, do you think there's any chance, any future that we end up in, and ETH outpaces Bitcoin as kind of the internet's money, right? The money of the internet.
Well, first off, let me just say that I probably love copy pasta more than I should. Uh, I've had a lot of fun with that recently. For whatever reason, my best performing copy pastas almost always involve Ethereum, which is why I can't resist doing more. So no, I have not actually sold
Okay,
all of
okay.
my
I
Ethereum.
fell for it.
I did sell 3 or 4 uh, ETH. Just honestly, part of it was to remind myself what it felt like to take a coin out of cold storage and move it to an exchange and sell it, just because I hadn't done that in 3 or 4 years, and I almost forgot what it felt like. Because you start to believe these assets aren't real money because it has no connection with my daily
Right.
life. I don't pay my mortgage, right? I don't pay for these vacations or anything with crypto assets. So like I almost forget that they're real. So part of that for me was just like exercising that muscle again, reminding myself this is real money, right? It has real value, and when it shows back up on your fiat account, you recognize that. As it relates to the sound money thing, I just look. I think Ethereum has value because people want to use it for stuff. They want to use it for DeFi applications. They want to use it for NFTs. Clearly, it has value, and the price has continued to go up. I don't think that it's competing with Bitcoin as a neutral reserve asset. I don't believe that it will be viewed as sound money in the long run. So whether it is a viable narrative challenge to Bitcoin, I don't know.
Right.
But my choice is just to own both. I own a lot more Bitcoin than Ethereum, but I'm probably going to own Ethereum until it either is much bigger than it is today or it fails. And when I was in Alabama talking with Ledger, we sort of both agreed that like probably going to go to 30,000 at some point. We sort of like shook hands on that. We're like, it's going to go to 30,000 almost certainly, just because as of right now, there's no reason for it to fail. Right? There's enough people using it. There's enough utility day to day in sort of crypto markets that it's probably going to get more valuable before it fails if it fails. So but again, I don't think it's money, right? I don't think it's trying to be sound money in the same way that Bitcoin is. I mean,
Yep.
you need to have some sort of like higher level thinking around what the actual inflation rate should be over time. I think it should be dictated by just the code and the protocol, and not subject to change as frequently based on like things that are working and aren't working. Like I view Ethereum as like a really interesting Silicon Valley tech startup, and I view Bitcoin as a protocol for money. And so both of those things can succeed. But I think a lot of narrative conflation is going on, and that makes sense to me because Bitcoin's the biggest. Everyone's going to take shots at it.
Yep. Yeah, I like that strategy of owning both, and with the added benefit that gives you of trolling people on Twitter. You can own both, you control both sides, and you benefit as they both go up. I mean, it's
I think I posted something, at least one or two things in the last 24 hours too, with Ethereum again for the first time in a while, and people just they love to engage with that, right? Everything every single time it's like brand new again. They're like, "Oh, Mike's talking about Ethereum." I also love talking about Cardano, and I
God.
got called a walking condom commercial by Charles Hoskinson. He started responding like I just asked him. I said, "Hey, like, when are you going to turn the buyback program back on?" Because to me, it just made no sense that the token was still trading over a dollar when like the chain just like barely works, right? It doesn't really do anything. Like it's talking about smart contracts forever, right? So apparently, it's all about academic credentials and like this strict review process. But Charles never even got a degree from Colorado. Like he dropped out from undergrad, I guess. I mean, there's just so much drama around Cardano. It's just amazing to me that people have been sucked in to that. So I think some of it is healthy, right? Some of the trolling is actually healthy because it does help people start to understand the differences in decentralization and quality and real deliverables that some teams are providing and others are not, where it's literally the token value is all hype and air. Um, I can definitely see it could cross over into being destructive though. Like for example, like when I talk about Ethereum, I don't have anything against Ethereum, right? I think Ethereum is fine. Like the Bitcoin maxis that follow me love it when I talk shit about it, but the reality is like I don't have a tremendous problem with it. Like to me, it's just another VC investment. Like I don't yell at people for investing in seed stage companies. Like to me, that's stupid, right? Like it's a free market. People should do what they want with their money.
What is a walking condom? Is my only question to that.
He's basically saying I you can look at it multiple ways, but a walking condom commercial basically means that I am me being around is advertising for condoms, right? Because if my parents had used one, I wouldn't exist. Right. That's what he said. But what was funny is Kobe and a bunch of other people responded to it. And I think Kobe said based. And then I actually inverse broad myself. And like Maine and a bunch of these other big trader guys that from crypto Twitter
Yeah.
were like, you can't inverse broad yourself. I said, that's what innovation is. I did something new. I thought it was so funny. I wanted to be inverse broad, right? Like the whole point was to bait him into conversation, and he kind of took the bait, and he kind of made a lot of people thought he was mean. They were like, "Wow, you're so mean," because they took him like totally seriously. I thought it was hilarious. Like he can insult me all he wants. Like I don't feel anything when Charles insults me. I actually get a really good chuckle out of it. If I can bait him into a few more insults, that would be amazing.
What's been incredible to watch is you described it as a boomer approach to crypto, and it was like at first, as you said, you're like, I don't really get the value prop here, and then you're like, oh shit, there's huge value prop, the deal flow, the info, the connections, and then you've slowly now converged into I'll also shitpost. I understand this angle too, and you said you approached it like a boomer, and it's just so funny to see. Twitter just swallows everyone, man. You spend enough time here, it's like the culture is just so infectious.
Yeah, I didn't like that people had this superiority complex. They would say like, I only use Twitter because it's the only thing that has value, and like LinkedIn sucks. And it's like, well, actually, I've built a couple businesses where LinkedIn was a huge opportunity for hiring, for connecting with other companies, and a bunch of other things that we were doing, building traditional companies. And so I always thought anyone who said that like had a inferiority complex, right, or was super insecure. But it turns out that those people are mostly right, right? Like Twitter just has this platform capability if you build a big enough audience where you can connect with anyone in your chosen space.
Yeah.
It crosses over from the metaverse back into the real world too, right? Because if you have a big enough audience, then you end up seeing a lot of people in the real world. And I saw that on this trip, right, where like back to back days with no pre planning, I ended up meeting with three of my favorite people in the entire crypto space, entirely because of Twitter. I wouldn't have been at Michael Saylor's house, right, a few weeks ago. I wouldn't have been on that call with Saylor. I wouldn't have connected him with Iris, right? None of that happens without Twitter. So I see the light now. I see how it's different than LinkedIn. LinkedIn just has no vitality. You post something on LinkedIn and it doesn't go anywhere, right? Yeah, it doesn't have any momentum or velocity. Whereas on Twitter, if you have like a really powerful idea or you have something really interesting to say, it can go everywhere, right? I've had a couple of tweets recently that had 3, 4, 5 million impressions, right? And then my wife finds them reposted on Instagram, and my brother in law finds them on the front page of Reddit, right, where somebody screenshotted it, and there's tons of thousands of comments debating something that was an idea that for me originally just sitting at my desk. I'm like, this is an interesting idea, and I posted on Twitter. and then it shows up on Reddit, right? And so that's the thing that I'm realizing more. Twitter is the origination point for all these memes and all these ideas. Like Instagram and TikTok and YouTube and all these might be valuable platforms, but there seems to be a lot less original content that actually starts there. It seems to start on Twitter, and then those memes get bigger, and then they start showing up on these other platforms as screenshots later. If that
Yeah.
makes sense.
Yeah, I almost view those as curation, really, for like culture. It's like Twitter is
Hmm.
where it starts. It's where it forms. It's where people share things and learn things. And then everywhere else is just trying to take those ideas and distill them down into simpler concepts that a wider audience might be able to get. But it's all starting on Twitter. And it's so weird that, I mean, it makes sense that a lot of the crypto, I don't even think would be able to run. Bitcoin is driven in a lot of ways by Twitter. Like everything happens on Twitter. I don't know if we'd be where we are if I think twitter.com is probably the most powerful company for Bitcoin and for crypto in the world.
Yeah, and the stock traded like it didn't matter. Here's the bifurcation, right? Like it's the most powerful meme generation factory on the planet, but unfortunately, that is not necessarily a good way to sell advertising, right? Because some of the ideas that are the most viral, you can't advertise on them, right? And you see that all the time, right? Like you see these big accounts where when they post something funny, right, that doesn't have any advertising angle, it doesn't have any company affiliation, it gets like 5,000 likes, and then they post a link to their most recent podcast they did, and it gets 4 likes, right? And so like Twitter is the anti-advertising platform, but if that's your primary way of monetizing, then it's going to be a very poor business. And that's what investors have recognized. Like it turns out Instagram and Facebook and all these platforms, as dead as they are for new idea generation, are incredible advertising platforms because people are demonstrating intent with their behaviors. They're basically giving you their personal contact information. They're showing you who their friends are. Twitter is less obvious. Like people are using it for learning and ideas and whatever, and it's just harder to generate revenue around that. But look, if the company gets bought, maybe it can be repurposed, repositioned as a private company, and actually start to demonstrate value to shareholders too over time. I'm a little skeptical that it's ever going to be like a wonderful business, but hopefully they don't kill the thing about Twitter that makes it powerful from a user standpoint. Because from a user standpoint, there's really no more powerful social media platform in the world, in my opinion.
Right. I mean, it's yeah. Watching this Elon thing go down. I don't know. I saw news this morning that they said the chances were increasing he was going to buy, but it's a
Well,
weird thing.
the stock's up 6%, and it's been trading up since about Wednesday. It bottomed out at 45 last Wednesday, and I think that's when there was the most skepticism about whether Elon could pull it off.
Right.
And then there were news stories about, hey, potentially partnering with PE, right? News stories over the weekend about the board reconsidering, and so the price is in the very short term when you're in like a merger situation, the price does tell you a lot about what the market believes about what the market participants are doing, and what the value might be. And the price is saying right now that there's a deal that's going to get done. Whether it's $55 a share or $60 a share, or whether there's somebody else that comes in from the outside. I know Toma Bravo or Orlando Bravo was working on a potential deal. There's probably two or three other bidders now that haven't even been announced in the press anywhere. They're trying to put together their bid. So now that everybody knows the company's in play, the company's probably going to get sold, even if it's not Elon. He just precipitated that process. And so again, if the price continues moving higher this week, I think you can sort of in your mind increase the odds of a successful transaction like quite significantly. I think we're already over like 60% probably. I think that's what the price is saying right now.
It's a fun thing to watch though, because it's Twitter feels like our office in a way. People that are full time crypto. It's where you spend all your time, and then
Hmm.
also the realization of how impactful it is for crypto and Bitcoin and spreading the idea, spreading the memes. It's like we're all watching like a revolt take place in our office in real time and cheering it on. You can bet on it. I mean, it's the greatest game ever invented.
Yeah, I mean, look how much time Mark Andreessen is spending on Twitter, right? Look how much time Elon Musk is spending on Twitter. Like they're doing that because they've all recognized that the memes do really control the world, right? A lot of what we believe to be true are just memes, but the meme formation and generation for the last few hundred or thousands of years was just a much longer process because we didn't have the internet to facilitate that. Now we have crypto, which is like the internet of money. And so you're able to facilitate the transfer instantly anywhere in the world of ideas. And now monetary value at the same time. And so you just have this convergence of so many different things that are coming to a head right now. And so yeah, it's almost like a meme when the one of the biggest guys on Twitter, who's also happens to be the richest man in the world, who also happens to have Bitcoin on his balance sheet and has played around with Dogecoin, is now bidding to take Twitter, the platform that you use to generate all these memes, private, right? Like you literally can't make this shit up. The meme generation that's happening even through this process with Elon is pretty incredible. And I kind of called it, right, like right at the beginning of this process, when he said he wasn't going to take the board seat, because I've been on a couple of activist campaigns and I know like the limitations when you sign these standstills. And so I commented on that. About it was a few days before it was clear that he was transitioning to a more activist approach and may try to take down the whole company. And I wrote a tweet just explaining like where I thought it was heading. And it turns out that's more or less like what's happening. I think the only thing that was a little odd is that Elon bid such a low number initially, right? And so that part like didn't make as much sense to me, right? I would have come in like if I was really serious, I would have come in at $58. I said that a couple times, like between 58 and 62. The week leading up to when all this news started, that seemed like the right number. And then he came out with whatever it was, 54.20, right? Which is if
A
you
meme
if
in
you look
itself.
at it, yeah, it's 420, and then if you add 5 and 4 together, you get 9. You add 4 and 2 together, you get
It's
6. So
6.
he's
Yeah.
got 6, 9, and 420 all embedded in this number, and that's cute and funny. But like the reason why the market didn't trade up initially is because it was so stupid, and it was so like it was such a joke that nobody believed that it was actually a legitimate offer.
And
So
he did it on
he's had to
420.
reposition.
He did it on 420 too.
Well, he offered that before.
Okay.
He offered that number before 420, but people were thinking he was going to raise his offer. That's what the narrative was last week. Oh, he's going to raise his offer on 420, right? Obviously, that didn't happen. That was last Wednesday.
What a
But I think he
savage.
will raise his offer, and I do think a deal will get done, even if he's not the winner.
What an absolute savage. It's just the most entertaining outcome is it's the most likely, man. All the memes are happening. They're all becoming
Mm-hmm.
reality. It's just crazy. One of the memes, before we wrap this up, Mike, one of the memes that's been spread about Bitcoin ever since I've been in is that it's going to become the world reserve currency. And if you look at the way things are playing out in the world, with the world's richest man trying to buy Twitter because it's the meme generation platform, and countries, as we were talking about earlier, and individuals realizing that Bitcoin is the most credible neutral asset, it seems like that meme more than ever this year. I know we're down a little bit in price and things are sluggish, but it seems like more than ever that meme, I'm starting to believe, man, like that could become reality. What do you think? What do you think that future looks like when we get there?
Look, I think we're headed towards hyper Bitcoinization, and whether that's 2030 or 2028 or 2032 or 35, I don't think it really matters, because if it happens, it's sort of like a light switch. It's either on or off. And if it's on and we actually do see massive Bitcoin adoption around the world, a massive adoption of Bitcoin as the reserve currency, right, as the reserve asset, then you're looking at prices that are much higher, but you're also looking at lower volatility at that point. And this is actually one of the fundamental things that a lot of the critics of Bitcoin just don't understand. They say something to the effect of, well, Bitcoin can't do that because it's too volatile. Well, it's like, well, what did you expect? This thing came out of nowhere in like 12 years from zero market cap, right? Because no one was even trading it for the first year. And now it's worth 750 billion, and it's held by some of the savviest, smartest, most connected people in the world. I mean, there's very few billionaires left that don't have at least a small exposure in my experience now, right? Like everybody realizes that they need to own more of this asset. So it seems sort of inevitable that it's going to get bigger. And if everything in the world was priced in Bitcoin, right? If you could buy a house in Bitcoin, if you could buy coffee in Bitcoin, if you go to the store and go to the grocery store and pay in Bitcoin, then it would be benchmarked to many more things in the real world. And so the price of Bitcoin itself would become less volatile, right? The illusion of the US dollar is that it's stable, because when you go to the store day over day, right, like the milk price doesn't move. But if you look at the milk price over 10 or 15 years, you're just losing money if you sit in cash. Like your purchasing power is declining. quite dramatically over time, particularly in an environment of higher inflation like we're experiencing now. So I think that that's the biggest thing, right? Is in a world post hyper Bitcoinization, where you can use Bitcoin for everything, you can buy real estate in Bitcoin, et cetera. Then Bitcoin isn't actually volatile at all, and there's that kind of leap of faith that you have to have. Like, can you imagine a world where Bitcoin's a 20, 30, $50 trillion asset and everybody uses it? When today that's not the case, when it's still somewhat nascent, it's still early, still looks volatile, right? It can still go down 30% in a week. I think that's great because that means it's still monetizing. It means there's actually a lot more return ahead for those of us that are holding it today. But it will trick people who are not paying attention to believing that it's failing or that it can't be money or that it can't be the reserve currency.
Right.
And maybe that's part of its design, right? Like it needs to befuddle a certain number of people, even as it on the other side is attracting kind of new believers every day.
Right. There's no such thing as free money. There's always going to be that risk, that hurdle you have to make. Mike, I appreciate you coming on, man. It's I'm glad we got a chance to do this. A round two, as I said before. Hopefully, our next time is in Vegas, dude. I got to stop by. Do this
Don,
one in
you're always
person.
welcome. Well, we can do it in the backyard at the pool, watching the golfers go down the fairway, assuming there's not too much wind. So I'm in for that whenever you want. Or we could do it over at like the Aria, right? Or Win. So you just tell me what your favorite venue is.
I'm down for both of those. Those both sound pretty damn good. Mike, it's always a pleasure making me more bullish on Bitcoin every single time we talk. Appreciate you for that, man. And we'll chat soon.
Awesome, Luke. Thank you.
Cheers.